The recent devaluation of the Naira and the subsequent proposal of a windfall tax on Nigerian banks sparked significant debate and concern within the financial sector. And we are here to delve deeper into the implications of these developments and, of course, explore the potential challenges and opportunities they present for the banking industry and the broader economy. Joining me this morning to unwrap this is Kenneth Erikume, partner at PwC Nigeria. Kenneth, thank you so much for joining us on Business Edge.
Thank you. Good morning.
One concern PwC raised in that report is the complex tax dilemma regarding the nature of these forex gains, whether they should be considered revenue or maybe capital. So I'd like you to speak to us about these dynamics and what each of these concepts would mean for the proposed tax.
Thank you very much for that question. I think you rightly identified that, since the publications came out that the government was considering this windfall tax, there's been quite a bit of controversy in the banking and financial services sector. And the debate around this is, first of all, whether there is an actual windfall, right? So when you apply this concept of where profits have been generated in a particular sector, for example, the war between Russia and Ukraine, where energy prices went up, and then the government in different countries levied a windfall tax on the high profit banks have held foreign currency assets on their balance sheet. And at year end, those have to be revalued based on the exchange rate at the time. So if you start with a 750 at the beginning of the year and end with a 1,500 at the end of the year, since you're still holding that asset, you would have made a gain, which will go into your profit or loss account, even though it may be unrealized because you haven't actually made a real gain. It's all paper. In actual sense, the banks haven't really made a profit because if they were keeping their financials in dollars, then there is really no profit. The second question that is raised is the big bang approach. And if you've noticed, the big bang approach with managing the economy never really works. People want things to be phased out so that the economic shock that gets into the system is properly managed. But, based on the proposals that we've seen or heard about, it may be intended that this windfall tax would go and apply on profits that have been declared by those banks in 2023. And they already filed their tax returns and submitted their tax returns in 2023. Impact on the books of these banks. And that's a big controversy because as a country, you always want to demonstrate to the general public that your tax policies are progressive and they are sustainable. So if you apply legislation and take it backwards, that doesn't really give a sense of security to investors around the tax landscape. So that is a major issue around this as well. So the questions around the constitutionality from that perspective, if you're saying it takes retroactive application. There are also questions around whether, because the proposals we've seen out there mentions that the tax would be paid over to the federal government. Okay. There are questions whether that is correct or appropriate from a constitutional perspective, because such revenues should normally accrue to both the federal and the subnationals. Okay. So that is another dimension that has created controversy as well.
Well, obviously, there are a lot of dusts raised as regards this windfall tax. And when we talk about a progressive tax and a business-friendly tax, some analysts are even saying that these forex gains might have been captured under the CIT, opining that the federal government will only impose a 20% tax balance. So what is it with the status of these gains anyway? Have they been taxed or not? And what is even the possibility or probability of these companies being enmeshed or being forced to having to comply with multiple taxation?
Thank you very much for that question. So in tax, there's the principle that you only tax exchange gains to the extent that they have been realized, right? So the portion of the gains that would have been taxed in 2023 would have been the portion that has been realized. And realization means that they have converted that asset from foreign currency to probably local currency, or they've used it to settle an obligation. So in 2023, not all of the gains the bank booked would have been realized. And rightly so. If they have not been realized, they shouldn't be taxed. But they could have been realized in subsequent years. And anytime they are realized, they'll be taxed at 30%, which is appropriate. You would also have discovered that in 2023, which is sort of the year the government was targeting, many other companies in other sectors suffered significant losses, especially in the manufacturing, in telco, and different other industries because of the devaluation. Now, for those guys, they may be reporting losses in their financial statement, but from a tax perspective, they may still pay tax if the losses have not been realized. So for example, they have obligations in foreign currency that they have not settled as at the year end. Then it means that those losses will not be realized and cannot be taken in the tax return. So they could still find themselves paying taxes. So realization is an important concept when you're looking at how you tax the exchange gains or you're giving deductions for the losses. So in other words, it's a timing thing, so whether it is realized or unrealized is a matter of timing. And whenever they are realized, they'll be taxed normally at the tax rate of 30%, which is fair. So what this tax sort of proposes is a 50% on those profits instead of the 30%, which means that, you're treating this sector differently from other sectors. So again, the principle around what they're doing, broadly makes sense. But like I said, the issue is that in reality, there is no real windfall. And I think that's number one. And I think number two is what industry stakeholders are asking is whether it is fair, to impose a tax of 30% on the banks, but you're 50% on realized profits on the banks, but not other industries, because there are other industries or companies that have made realized profits from exchange gains as well. And then the corollary effect is government going to give a deduction at 50% on the other sectors of the economy that have suffered significantly due to the devaluation. And those are some of the it's all about timing. So it would have been taxed either in 2023 or 2024 or 2025. So government will get its revenue. But taxing it at a higher rate, I think, is where there's been feedback on whether this is fair, whether it is constitutional, whether it is in line with stabilizing the economy and things like that.
Well, yes, Kenneth, even as you are opening up these box for us to understand, it seems as though that might just be opening up a potential legal case in terms of what is obtainable and what can be done. Because earlier on, you still talked about the fact that when this treasure box comes in terms of the money is being raked in from the supposed taxes, who takes it? Is it the federal government? Would it be shared among the subnationals? Of course. So I'd like to understand that legal aspect, because it's being speculated that there's a possibility that there might just be a legal case that the banks or the banking industry might be able to tender as regards these issues. A lot of it that we may need to also delve into, looking at the retroactive nature of the tax itself. So I'd like you to speak more about that. Maybe this could be, or maybe this could take a legal shape.
Right. Thank you for that. I think first one is the backdrop of this. Before I delve into the legal issues and the matter of constitution, I think we need to take a step back and understand the banking industry and where they are at the moment. What has happened is that there have been quite a number of monetary policies that have come from the central bank that have had an impact on the banking sector. For example, there were thresholds around the net open position of the banks, which they've had to comply with. There have been variations around, their capital structure, and the central bank has asked that the banks have to increase their share capital in order to be able to withstand and finance a significant chunk of the economy. Now, in terms of timing, this windfall tax is coming at a point where the banks need to shore up their capital, right? And it brings in questions around the valuation of the banks for the purposes of public offers, as well as raising that capital. So for me, that is a timing issue that, really needs to be addressed, because, it creates a lot of uncertainty around their ability to raise capital. So they'll be on the back foot, and I think questions will be raised. And like you said, there'll be questions around constitution. The retroactive effect, as well as the issue to do around where does this revenue accrue. Nigeria is no stranger to some of these conversations. If you remember, there was a time the Rivers State government took the federal government to court around being, administering VAT, which is essentially a state tax. And, as you can imagine, there has been a lot of pressure on the subnationals to also raise revenue. And the recent pronouncement of the Supreme Court that the states cannot hold the accounts of the local government also brings, more pressure to the states, as well as the autonomy of the local governments to operate. So there'll be questions raised around this windfall tax. This windfall, how does it fall? How does the waterfall work when it comes to the subnational, the states and the local government? What comes to me, what doesn't come to me? Based on the current draft, it doesn't suggest that the funds will accrue into the federation account. It sort of suggests that it will go into the coffers of the federal government. And, that could raise a problem and a dispute in terms of, these various arms of government and their sustainability. So those would be some of the conversations. As you can imagine, when this windfall tax was rolled out, it was clearly specified as a federal government initiative, and was tied to funding the additional 6.2 trillion budget of the federal government, as well as the injection of
Hello, Kenneth.
Be interesting to see how they unfold,
Okay.
because that could lead to quite a number of conversations.
Okay, well, of course, given the controversy surrounding this particular windfall tax, I'm wondering how investors will be looking at it both domestically and internationally, most especially for those who already have their funds in the system and those who are thinking of even investing into the system with this lot of dusts and bohaha as regards a windfall tax, what is to be paid, how it affects the banks, how they'll be able to raise the capital, areas around liquidity, sustaining the financial industry and all that. How do you think they would actually be looking at this particular brewing storm, if I could call it?
Yeah, I wouldn't, unfortunately, I'm local, so I can't speak for foreign investors. But there are certain things to look at, based on my experience with having conversations with foreign investors. One of the things that drives investment is actually predictability of the economy and the financial systems, as well as the laws. So a stable economic environment would always be more attractive than an unstable one, irrespective of the economic circumstances and other factors. So you may have, good talent, you may have natural resources, but an investor always wants to be able to predict that for every Naira or $1 they invest, this is how much return I will be making. Already the economy is already fraught with a lot of uncertainties. One of it obviously is the exchange rate, which the central bank has done quite a bit to try to stabilize and harmonize the official rate and the parallel market rate. What you find in many other jurisdictions is that there's no two rates, it's just one rate. So that creates a bit of uncertainty already. The other bits that a foreign investor will be looking at is whether, if I make an investment today, there could be law changes that would reverse the active application of laws are not attractive to a foreign investor, because it means that what they were aware of at the time of the investment changes immediately after their investment. So it sends a signal to foreign investors that things can change. And then the final bit, that a foreign investor would be considering is the big bang approach. Now, there are arguments for and arguments against some of the policies that we have had to undertake as a country. Those things had to be done, and I'm one of the advocates of those things.
Okay.
For example, the removal of fuel subsidy, which was big bang, the harmonization of the rates, which was big bang, but you could see the sort of shocks it sent into the economy, right? It would have been better if we had done those things in a phased approach. So those are some of the things that a foreign investor would be looking at and considering when they're looking at this.
Okay, so we already know that forex issues actually add into inflation in terms of the depreciation of the Naira, the cost of doing business, and of course the removal of fuel subsidy that you mentioned. Now we know that the Monetary Policy Committee of the CBN will be announcing probably new rates later today. But then what are your predictions on that? Because we know it's all about taming inflation. Should they hold? Should they hike? Should they drop? What do you think? Just in about 30 seconds, your thoughts.
Yeah, so first of all, I don't have a crystal ball, so I can't predict. But I can tell you something. There is a low probability that there'll be any more tightening in terms of the interest rates. And the reason why I say this is that already the real sector, manufacturing, companies generally are squeaking from the high interest rates. And when you look at comparables of other countries, in Africa, Egypt has had to contend with significant inflation, but they've held their
Hello, Kenneth. Oh, dear me. I think we just lost connection with Kenneth there while he was trying to conclude on what the expectations are, looking at the MPC meeting that will be concluding today, and if there's a possibility that rates will either be hiked. But he said that he doesn't think there would be more tightening of the policy arising from today's meeting by the MPC. But then we just get to wait and see, and we'll get to bring you the details. Well, Kenneth Erikume, partner PwC Nigeria, thank you so much for sharing your thoughts with us on the show at this time.